planted with a crop, the alfalfa, say a oat crop that might be able to come off to help fund that first year. And then, so those costs of the first year that aren't covered by a crop return are then prorated across the years that the alfalfa might be in place, say 3 to 5 years for the alfalfa stand. And the cost is, well, in the example, prorated for 3 years. So in orchards, for a long-term investment, those crops are usually capitalized. So what the economists call net present value analysis, which basically says a dollar's worth more in the future. So what's the net stream of value for the enterprise over a long period of time? It gets kind of complicated. And that's one thing I wanted to mention about these budgets. They can be very simple, very straightforward, or you can make them more and more complicated to meet your needs. It just depends on what you need. If you need help with these, as far as putting them together, there's some resources. In Idaho, we have, in southern Idaho, we have several extension economists. And, excuse me, up north, in northern Idaho, we have some people in the College of Agriculture. I'm choking up here, excuse me. Okay, pardon me. I'm going to move on. So the enterprise budget gives you numbers to say whether or not this could be a possible successful enterprise for your farm or ranch. But it has to go beyond numbers. Whether or not, I'm just not a cow man, so my brother-in-law rents the pasture and raises cows on our farm. I don't. I have a preference not to raise cows, and enterprise might look profitable, but if you didn't have the backing for the investment level, it might not be practical. Okay, I am really apologize, but my voice is just giving out. I've got this bug going on, and it just caught up with me. From the University of Idaho does publish University of Idaho Ag Biz site. You can find it at that particular address, or just go to University of Idaho and type Ag Biz. And we publish a number of budgets for crops and livestock enterprises common across the state. If your budget's not, if your particular crop or livestock enterprise isn't there, then I'd be happy to work with you, or your local county extension educator can get you resources to meet your needs. I just wanted to go through a couple quick calculations to show what Barbara was talking about. Quickly, cost of production is just the total cost for the watermelon production divided by the expected production, 250 hundredweight per acre, which gives you 542 per hundredweight cost of production. In other words, that's the break-even cost that covers all the cost of production for watermelons, given that yield of 250 hundredweight. You would be surprised the difference between farms in the cost of production, even though a lot of farmers might buy their inputs at similar locations. Their cost structure is really based on their business structure and their equipment, their land resources. So it can vary fairly widely. But you can get that off the enterprise budget. The break-even yield is just the total cost divided by the output price. In the case of watermelon, remember we had a total cost of $13.55.22, a contract price for the watermelon of $5.50, and the break-even yield of $2.46, pretty close to the projected yield of 250 hundredweight. then the final example I wanted to show you is to calculate a break-even price. In this case, I'm going to calculate a break-even price to cover variable costs. So the variable cost of $11.93.22 divided by the expected yield of 250 hundredweight yields a break-even price of $4.77 per hundredweight. So what that $4.77 is also called the shutdown point. If you're not making $4.77, if your break-even price is not $4.77 per hundredweight, you won't even make enough money to cover your variable costs. So you'd be better not to produce anything than to raise a crop where you can't even cover your variable costs. Just some those are some quick examples of using enterprise budget. Well, like Barbara said, I can't see you out there. I don't know about you. I tend to multitask on the computer. I hope nobody's watching a Netflix movie at this point, however. But I hope you will try and use an enterprise budget. I think they're great tools, particularly if you get good at them, consistently use the same information and build them the same way. You can use them to identify enterprises, but also can use them to develop a whole farm plan, which you really need to really know what your farm's profitability is and potentials to move forward into new enterprises. I thank you for your patience with me. There is one question there. Is it FinTech? And somebody did answer and give you the website for downloading FinTech. If you have any questions on using FinTech, go ahead and give me a call. I'd be happy to help you. It's FINPACK, FinTech. And I have only just, well, you can see the next slide has my contact information, Colette, so thank you.
Okay, Ken, we do have a couple of questions.
Okay.
When you were giving the example of the watermelons, Ursula is asking, does that mean that you need to sell them for at least 5 cents a pound? So Cinda, maybe you could go back to the cost per hundredweight on the watermelons.
Yeah.
Right here. So I think what Ursula is wondering is, what does this look like in the market for how you price your product?
Okay. Yeah, in this budget, $5.50 per hundredweight. So in other words, 5 cents a pound would be the minimum. Probably a contracted price, not a fresh market price.
Right. Okay, thank you. And then another question from Ursula kind of comes in the form of a comment, where she said that she read many entrepreneurs that failed to attribute a dollar value to their labor failed overall. So I was wondering if you and or Barbara has anything to talk about in terms of valuing your labor.
Well, you can see in the enterprise budget that the owner's labor is basically a residual. It's part of the profit bottom line, but that profit also has to go towards, future new investment, or that profit also goes towards risk and management, not only labor. Yeah, I guess that's, I can appreciate the comment that they failed by doing that, but it's historically somewhat the nature of agriculture that, you live cash poor and die asset rich, because those, the farmer's labor, a lot of that is tied up in assets.
And I'm going to agree with Ken on that, although if you are doing projections and you're determining whether or not an enterprise is feasible and you have expenses that you need to pay, let's say a car payment or rent or just the cost of living, you need to do a personal budget and figure out what that's going to amount to per month or per season and include that in your projections. And just all business owners want to be paid a good living, but good business owners tend to pay everybody else before they pay themselves, and they only get paid if there's a profit after taxes. And then with something seasonal like typical farm operations, cash flow is the big deal. If you have to pay yourself every month and you have to borrow money ahead of the season to pay yourself for your cost of living every month, you might start out in the hole. So this is one of the big challenges related to a capital intensive business that's seasonal. And definitely you have to plan ahead that you're going to need to pay something for your time, because your time is valuable and because you need to earn a living. But again, you might not get that paycheck until the end of the year or the end of the season, and then only if profitable. That makes sense?
Well, that does make sense to me. This is Colette. Uh, we have another question, or comment actually, and this is from Lorraine Roach, and she says a friend of hers recently attended a family ranch management course. They recommended that owner labor be calculated and included in the financial analysis using two rates: a management labor rate of, for example, $40 an hour, and an operations labor rate of $10 an hour for each enterprise.
I mean, I think that's a great idea, because you could add that particularly into an enterprise budget and then decide whether or not that enterprise would be profitable based on you demand those kind of returns. It's just kind of, it's a difficult thing normally on a farm to say, well, how many hours are management, how many hours are labor. Um, it's just traditionally been more just what's left over has been allocated to those resources.